Dubai's 0% income tax sounds like an ultimate wealth-building dream, until you start adding up the hidden housing, healthcare, and schooling costs that completely reshape your actual expat budget. The statutory reality is genuinely true. The UAE charges 0% personal income tax on employment earnings, 0% capital gains tax, and 0% inheritance tax across the entire country. If you earn $100,000 in Dubai, your gross income equals your net pay, unlike European nations, where workers surrender massive portions of their earnings to the state. In Germany, that same $100,000 salary shrinks to roughly $58,000 after tax and social security deductions, creating a stark initial gap in take-home pay. Meanwhile, in the United Kingdom, workers take home about $67,000 from that same gross amount, highlighting why thousands of professionals enthusiastically Google Dubai relocation data every month. Analyzing relocation data from over 400 expats reveals a more nuanced reality than any social media influencer will tell you about building long-term wealth in the Emirate. While individuals remain exempt from income tax, the corporate landscape shifted significantly when the UAE introduced a federal corporate tax regime under Federal Decree Law No. 47 of 2022. Companies with annual profits exceeding 375,000 dirhams are subject to a 9% tax rate on the portion of profit above this specific statutory threshold limit. Earnings below this 375,000 dirham threshold remain taxed at 0%, ensuring small business owners and freelancers operating below the limit face negligible immediate tax impacts. Day traders, investors, and property flippers love that stock portfolios, crypto gains, and property sales incur zero capital gains tax, requiring zero reporting for personal investment portfolios across the Emirate. Because the government does not tax income, the economic structure extracts revenue through indirect taxation, consumption fees, and municipal charges that fund public infrastructure instead of progressive income tax brackets. A 5% value-added tax applies to most goods and services across the UAE, acting as a consumption tax borne directly by end consumers in their daily living expenses. Restaurants, retail shopping, entertainment venues, professional services, and daily groceries all carry this mandatory 5% markup, adding thousands of dirhams annually to typical expat household spending totals. For a typical expat household spending 20,000 dirhams monthly on general goods, the monthly VT impact reaches 1,000 dirhams, totaling up to 18,000 dirhams annually. Additionally, specific excise duties are levied on products deemed harmful to health or the environment, such as sugary drinks, energy beverages, and tobacco products sold throughout local retail stores. Expats quickly discover that Dubai does not tax income, primarily because it taxes existence itself, with every single aspect of daily living carrying fees, deposits, and mandatory government charges. Residence visas, Emirates ID cards, mandatory medical fitness tests, and visa stamping must be renewed every 2 to 3 years, forming an unavoidable administrative expense for every foreign worker. A standard residence visa costs between 2,000 and 3,500 dirhams, while Emirates ID, medical tests, and typing center fees add thousands more every few operating years. Health insurance is strictly required by law for all residents, with basic network-only coverage costing 5,000 to 8,000 dirhams annually per person for basic healthcare access requirements. Mid-tier health insurance packages range from 10,000 to 15,000 dirhams annually, meaning a family of 4 can easily spend up to 50,000 dirhams yearly on medical coverage. Accommodation is almost always an expat's single biggest monthly expense, consuming between 30 and 40% of an average household budget across prime and suburban residential communities alike. Citywide rental ranges show that a standard one-bedroom apartment costs between 4,000 and 7,500 dirhams monthly, while two-bedroom units typically command 6,000 to 9,000 dirhams per month. If you prefer prime waterfront locations, townhouses range from 16 to 22,000 dirhams monthly, and luxurious villas easily stretch past 27,000 dirhams per month in exclusive districts. First-year housing expenses involve far more than monthly rent alone, starting with a mandatory 5% real estate agent commission, calculated directly from the total annual rental value. Renters must also pay for a jari registration costing 220 dirhams, security deposits reaching up to 10% of annual rent, and utility provider utility security deposits. A municipal housing fee equal to 5% of your annual rent is billed directly through your monthly DIWA utility statements, creating a recurring yearly administrative surcharge for residents. Setting up electricity and water services with the Dubai Electricity and Water Authority requires security deposits ranging from 2,000 to 4,000 dirhams for residential apartments. Air conditioning costs form a massive portion of utility bills, running for 8 intense summer months and driving annual cooling expenses to over $3,600 for typical households. Because public transit options are limited outside central metro lines, car ownership, fuel, and vehicle maintenance run families approximately $8,400 annually compared to minor public transit costs. Navigating Dubai without a car is challenging due to the sprawling urban layout, turning vehicle acquisition, insurance, registration fees, and fuel consumption into a substantial monthly overhead expense. For expat families with children, education represents one of the single largest financial hurdles, as there are no free public schooling options available for expatriate children living in Dubai. British and American curriculum private schools charge annual tuition fees ranging from 40,000 up to 100,000 dirhams per child across mid-tier and premium educational institutions. Even budget-friendly private schools demand between 30,000 and 50,000 dirhams yearly per student, making the financial burden of child education a decisive factor for relocating families. For single professionals living without dependents, realistic monthly living expenses, excluding rent, range between 4,000 and 12,000 dirhams, depending entirely on lifestyle choices and dining habits. A family of 4 should realistically plan for monthly living costs between 20,000 and 35,000 dirhams, excluding premium schooling fees and luxury housing in central waterfront communities. 3 major financial levers change your monthly totals dramatically: your residential neighborhood, your private school commitments, and whether you choose private car ownership over public metro transit networks. On a global scale, Mercer data ranks Dubai among the 15 most expensive cities globally for expatriates and the most expensive urban center throughout the entire Middle East region. Despite high local housing costs, Dubai remains roughly 45% cheaper than New York City and about 20 to 30% cheaper than London on a like-for-like baseline comparison. Comparing Berlin and Dubai reveals that housing, healthcare, schooling, and cooling expenses in Dubai add over $52,000 in extra yearly costs compared to living in the German capital. For a family earning $100,000, a $42,000 tax saving in Dubai is entirely wiped out by these $52,000 in additional hidden living expenses. This means that for middle-income families with children, living in Dubai can actually cost $10,000 more annually than residing in Berlin, defying the popular tax-free haven narrative. However, the financial mathematics flip dramatically in favor of Dubai under 2 specific scenarios where high earners and business owners maximize the statutory zero tax framework without dependence. Scenario 1 involves high-earning professionals making over $200,000 annually who do not have private school tuition fees, allowing them to capture massive personal income tax savings. While extra living costs remain around $30,000, tax savings reach up to $80,000, leaving a net annual benefit of $30,000 to $50,000 extra saved dollars. Scenario 2 benefits entrepreneurs and digital nomads with UAE-sourced corporate income who leverage the favorable regulatory environment to scale their global remote businesses from licensed free zone operational bases. The 9% corporate tax rate on profits exceeding 375,000 dirhams remains dramatically lower than European corporate tax rates, ranging from 19 to 33%. Combined with zero tax on business dividends, a corporate owner retaining $500,000 in annual profit saves over $100,000 versus operating out of the United Kingdom. Property owners enjoy zero annual property taxes, paying only a 4% transfer fee when purchasing real estate, alongside a standard 2% real estate agent commission upon transaction completion. Passing generational wealth to family members occurs completely tax-free with zero death duties or estate taxes, though non-Muslim expats must establish proper legal wills to navigate local estate regulations. Social media reels showcasing luxury beach clubs and supercar rentals create an aspirational illusion that obscures the gritty financial reality experienced by ordinary working-class expats trying to make ends meet. Relocation experts emphasize that most expats only successfully save money if they earn at least 20,000 dirhams monthly and live strategically outside ultra-expensive central districts like downtown and Marina. For workers earning salaries below 20,000 dirhams, the advertised tax-free benefit completely disappears, absorbed entirely by mandatory insurance, visa fees, housing deposits, and high consumption taxes. On the positive side, local banking infrastructure is robust, and the United Arab Emirates dirham remains pegged securely to the US dollar, protecting expat savings from severe currency devaluation risks. Residents enjoy world-class infrastructure, exceptionally low crime rates, pristine public spaces, and highly efficient digital government services that streamline daily administrative tasks without frustrating bureaucratic delays. The introduction of specialized remote work permits and freelance visas has successfully attracted thousands of global digital nomads seeking to combine Mediterranean sunshine with tax-free operational structures. Ultimately, analyzing the real cost of living demonstrates that zero income tax is never a blank check, requiring rigorous financial planning to ensure hidden fees do not outweigh your tax savings. Expats who understand these hidden financial mechanics can thrive exceptionally well, while those arriving unprepared often find themselves trapped in an expensive lifestyle cycle that drains their expected savings. Factoring in housing fees, health insurance, school tuition, and consumption taxes reveals the true economic ecosystem behind the glittering skyline before you pack your bags for the Emirate. The 0% tax illusion teaches us that fiscal policy always balances out, trading direct income deductions for heavy consumption taxes, pricey housing, and mandatory healthcare fees. Whether Dubai becomes a wealth-building machine or an expensive relocation mistake depends entirely on your income bracket, family status, and disciplined budgeting choices in the years ahead. Share this breakdown with anyone planning to relocate, and subscribe for more deep dive analyses exposing the real financial costs behind popular global tax havens and expat destinations.